Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Monday, the 11th of September, 2023, a sad day. I hope you know where you were. I know where I was 20-some-odd years ago. I remember sitting at my office desk, watching TV in the morning, and I'm looking, and I go, oh, wow, a small plane hit the World Trade Center. I'm going, wow. I didn't realize it was a jet. And then I saw the other one minutes later come in. I went, oh, my God, it's a terrorist attack. And it changed everybody's life. I can tell you I had friends that were their close friend and dead. Didn't make it out of that event. He was in actually the quote business. He was one of the vendors that I was buying quotes from. Terrible event. And obviously a lot of traders that I can't say they were friends or acquaintances, but definitely a friend I lost. And I feel sad about it. I think about it every year. All right, so let's talk about what we've got on other venues here. And my heart goes out to all the families and the kids. So in looking, we have tomorrow the Apple event where we get to see the new products, new pricing, is it good, bad, indifferent. And then the real events for us futures traders begin because we get CPI, PPI. We have the European Central Bank monetary policy announcement. We have the potential of the UAW strike starting right after the 14th. And you have me because we have our live What's Up webinar. And that's going to be Thursday. I'll open it at 12:15 p.m. Central Time. I'll begin talking at 12:30. I will end 20 minutes later. All the chart analysis you want, you send me the questions, you ask them during it. It's not a lecture. If I don't get enough questions, I don't continue. So you have to throw at me what you want for it to work. It's free to you. We are 2/3 of the way full already, so we'll fill out pretty fast here. How do you get it if you didn't get an invite from me? That's your question. Move your cursor to the top here. You'll see an icon. Give the icon a click. It'll take you right to the page that you need. Fill out the information. Once you fill it out and submit it, you're going to get an email from us. So check your inbox and your spam, obviously. Take a look. Write me any of the questions you want out of that email. Read it, and you will see there's an area you click. It creates a link that comes direct to my desk. I will create the charts, and away we go. It's that simple. If you have questions, you can call my staff during the daytime hours. Okay. So we have a lot going on. The markets today tried a little bit of everything, didn't go very far. The gold market tried the 1954 level, pulled back $10. The dollar down a bit, helped the gold and the other markets rally. Foreign currencies fairly quiet this hour. We tried even higher prices than this in the energies, they slipped. Bonds and notes continue to add yield. Yeah, and that's because, as I told you, the U.S. Treasury just keeps adding and sucking all the air out of the room. They had to get to $1 trillion. They're working on it, and they have to pay up to get investors to give them money. That's exactly what is going on. When we look at the S&P, it still has a bullish bias until the market settles underneath the 18-week moving average of closes. I'm friendly. I have an upside bias in the market. When I look at the chart pattern is right now friendly. Higher lows, higher highs on the swing line. The brown line is the swing line. In order to draw to the current value, up or down, it looks very carefully, are we having an inside day, an outside day up, an outside day down, a higher high day than yesterday, or a lower low day? 5 variables, and from there it draws it. I created the indicator, and it tells me this. The trend is up because you have higher highs, higher lows. What will violate the trend is taking out 44.33 1/4. That's what it tells me. I then look to see where the market's at in relation to the 18-day average of closes. The market is over it, therefore it's got upside bias. So the pros, if they want to step into the market, might be a buyer at 44.56 roughly, stops under that low. For me, the problem will be if it gets down to that average, it means it's going to take out the lows of today, which was Monday. I will have lower highs and higher lows. I already know that. Why get involved? I then take a look to see where's the Bollinger Bands. They're far away. The market's hanging more at the 18-day average than anything else. And it was overbought. It's corrected that. Neither number is in overbought territory, defined by me as a reading over 70 in either of the slow stochastic, called the K and the D lines. Therefore, I have a market that's neutral in momentum, not pointing up, but neutral, certainly not pointing down, and a bullish overall trend with upside bias. The bulls are winning that battle. In the NASDAQ, it is not the same. Yes, we have the trend up, higher lows, higher highs. We have gotten recently to the upper Bollinger Band, and 95% of the time, the market will not close outside of these bands. Therefore, that's a good resistance point. Number two, you're overbought. You do have readings over the 70 level. I don't like that. Then I go to the Dow. And in the Dow, I have higher lows. I have higher highs. I could, just like in the S&P, if I get down to that 18-day average, have lower highs, higher lows. And I have market that's got support at two levels, the 18 and the 100-day average in terms of moving averages. A big break carries you into bigger support at the lower Bollinger Band, the black dashed line, and the 200-day average, all right? But going in to tomorrow, not into the big CPI number, at this point, the bulls have control of the market. In the Russell, you have a different type of look. While you have higher lows, higher highs, you're under the 200-day average in the gray, the green, the 100, the 18. Won't take very much. Get down under the lows of Friday, and what happens, you open the door for the 1831 level. The dilemma for the market, it's an oversold territory. One of the numbers is under 30. I then come to the bond market, and you know I've been a regular bear in this market. We keep coming down, but you're in oversold territory. Again, any reading under 30 is oversold for me. What about the 5-year? Identical, bear trend. I don't think bear trends that get oversold attract a lot of new money. In the dollar index, tomorrow's the key day. You still have the embedded reading, but you lost ground today and you closed in the bottom quadrant. The market must get an update to keep the embedded reading, otherwise it'll disappear. If it gets it, the target could be the 105.24 level. Got to pay very close attention. If it loses the embedded reading, the odds favor it's going to go down to wherever the 18-day average is before it goes up for a new high. And in the eurocurrency, it's the flip-flop. It might lose the bearish reading. It hasn't lost it yet. So they're going to tell us tomorrow, I think, what the trends are in these two markets. In the British pound, you came down and you challenged the combination of the black dashed line, the Bollinger Band, and the 200-day average, and the market immediately said, okay, because pros look at these things, and what they'll do is they'll say in their program, hey, we haven't been down at a 200-day average in 6 months, a year. Why do I want to be the first guy saying you're just going to keep going under that? I'll program the computer. If it hits it, tell me to get out. You start doing all this. It's called algo trading. You can do it yourself. I'm doing it right now on something else that I've been working on. And it's not easy, but then you get it. I know the rules. I can look at a chart and do it without the computer, but I want the computer to scan 100 charts for me in spiders, ETFs, and do a certain thing. In any case, lower high, yep. Is it a lower low? Well, I don't know. You got up here to the higher high, and when you took out this low, you made the lower low. It's not a trend. I'm not wrong on where the numbers are there. I double-checked them. Are we going to embed? Uh-oh. Embedding takes, for those of you taking my enhanced Bollinger Band course, 3 days where the market's under the 20 level, both numbers. But you cannot count the day you're in. You don't know where it's going to close yet. It certainly did that for the Monday close. It certainly did it for the Friday close. So guess what? Today, Tuesday's trade, which is, I'm talking to you on Monday night, but it's Tuesday trade already. It's going to determine if it embeds or not. It's a big day for that tomorrow. Bitcoin, embedded reading, breaking the back of the market, might be going for the 24,635 level. This is a trade I got very fortunate on for my subscribers. In the November Brent and WTI oil market coming down, and the differentials just hanging here between 380, 390, not going anywhere, just sort of not telling a story at all. Do you have the embedded reading here? Again, Brent is not open yet. See how it says Monday up there? So both numbers were over 80 on the close. On Friday, both were over 80, and both were over 80 the day before. Just out of curiosity, they weren't the day before. So this tells me you embedded today. And that tells me that if you know the course that I have, traders will be looking on pullbacks, what to do in the market with the caveat that's in the course. I'm not going to spill that here. In the WTI, you're embedded as well there. So the pullbacks in the market, still buying opportunities unless you lose the embedded reading. Gasoline, no. You're over the upper Bollinger Band, you're overbought. I think the pros are coming out of the market. I know you're going to tell me, as usual, this is the event, Ira, it's going to keep running. Okay. I keep saying I'm going to change that to heating oil, and I miss doing it. I'm going to try to remember to get that done. In natural gas, lower highs, lower lows. Now, we will know over the next few days what's going to happen in Australia. Chevron, Australia, is going to go to the umpire. They have, think of it as an arbitration process. If the union and the companies can't get together, smartly, they force on them an arbitration process that either side can ask for. And it is mandatory. Now, it just went into law in June. Virgin Airlines was the first to try it. They got into the process and both sides agreed. You know, you get to an arbitrator and you have to take what he says. This isn't a court of law the same way. It's binding. That part is going to hold up because the legislature put it in. However, you don't discover the same way. You don't have the same benefits that you do in normal courts. It's more or less an argument where both sides can hear each other out, and if they're smart, they find a way to settle. I like the whole process so far, but I want to see how at least one case goes before I say, hey, this really is sort of neat. At least give me a case. I already saw one in Virgin. The fact that they settled proves that, hey, this is better than a 2-year trial or a 6-month where both sides go broke with the legal fees. This is much, much better. So that is going on. I know they haven't begun the process. It might begin Thursday or so. It's right around the corner. So they don't have a long time to prepare. From the day Virgin filed for it, it was 3 weeks later to the settlement. That's very short when you're fighting with big unions and all and doing something like that. So impressive. Now, you have the UAW coming up this Thursday. What are they going to do? 146,000 workers potentially going to go out? Are they going to strike one of the companies? There's enough money, as I understand it. There's $825 million that the fund has as a slush fund to give each worker $500. Problems, though, come about with that. I just heard that for the Writers Guild in America, they could lose insurance. They have one of the best insurance policies of all, but you have to put a certain amount in over a certain period of time. If you go out on strike too long, these people could end up without insurance. It's in today, I think it's a Bloomberg article. I didn't realize any of that was happening. So my heart goes out to all these people. Settle. There's got to be a way to reach one. In any case, my WhatsApp app will be there for you, the webinar. Give yourself a click up here, fill out the form, write me the questions, away we go. And I will definitely see you come Thursday. I'm there in video as well, so you get to see me on and off during that, and we try to answer all the questions you have. Have a great evening. I'm Ira Epstein.